When people think of bear markets, they imagine a world that is collapsing. Fear, panic, headlines screaming, crypto is dead. But the truth is very different. The bear market isn't the end of the story. It's the beginning of clarity. Because it's only in the silence, only in a winter, that you finally see the world for what it really is. Not the world of influencers, not the world of hype, not the world of emotional decisions, but the real world, the one that is being built quietly behind the scenes by the people who never panic. And today, whether you feel it or not, whether you see it or not, we are living through the biggest shift in financial history since the creation of stock market. Crypto is not the same as it was 1 year ago, or 5 years ago, or 10 years ago. It has matured, it has outgrown its childhood, and it has entered to one phases most people still don't understand. Crypto is now becoming part of the global financial infrastructure. This is no longer a playground for early adopters. This is no longer a hobby for tech nerds. This is no longer digital money for fun. This is institutional. This is systematic. This is becoming foundational. Governments acknowledge it. Fortune 500 companies buy and hold it. ETFs have legitimized it as an official regulated asset. Banks integrate it. Traditional finance, the same world that mocked crypto for years, now treats it as a strategic necessity. And when something becomes necessity, it becomes permanent. AI cannot run on fiat. Automated global systems cannot run on slow, permissioned money. Digital economies cannot operate on analog foundations. The world can't scale with paper promises. Everything that is coming, AI services, tokenized assets, automated contracts, robotics, smart cities, global micropayments, all of it requires a digital, programmable, borderless money. In short, crypto is not a trend. Crypto is not a phase. Crypto is the operating system of the future. And if you understand this truly, understand it truly, you will never again look at the bear market the same way. Now, let's go deeper. Every financial cycle begins and ends with human emotions. Not charts, not indicators, not predictions, but emotions. Like fear, greed, hope, denial, euphoria, despair. Exactly the same emotional sequence that has repeated for centuries. In every asset class, in every generation, the same psychology that destroyed investors in railroads, the same psychology that destroys investors in oil, the same psychology that destroyed investors in a dot-com boom, and also the same psychology that destroys people today in crypto. Human nature never changes. Only the technology does. This is why markets are predictable, even though prices are not. People repeat the same mistakes. People react the same way. People fall for the same traps. And here is the uncomfortable truth. Your biggest enemy in the bear market is not Bitcoin's price. It's not the institutions or whales. It's not the governments. Your biggest enemy is your own belief system, because When the price goes down, your mind doesn't say, it's just volatility. No, your mind says, I was wrong. I failed. I don't deserve this. That voice is what destroys portfolios, not the market. Most people don't lose money because they bought the wrong asset. They lose money because they couldn't hold the right asset long enough. Bear markets feel like betrayal because you entered the game hoping for fast rewards. But crypto was never meant to reward the impatient. Crypto rewards clarity. Crypto rewards convictions. People who understand what they really own. And this is where the transformation really begins. Once you see the full big picture, fear collapses. Once you understand the new financial system that is being built, the noise vanishes. And you understand the hidden mechanics behind the chaos. You become unshakable. So, in this episode, I'll give you something most people never receive. The complete blueprint, the truth behind the volatility, the psychology behind the manipulation, the institutional game that runs underneath the charts, and the path to survive and win no matter how deep the bear market goes. This is not a motivational video. This is a survival guide. This is a map of the new world. This is the truth behind the system. And now that you understand the human conflict, let's move deeper into the reality that most retail investors still refuse to accept. A reality that changes absolutely everything. For more than a decade, retail investors believed crypto was their playground, a wild frontier, a place where a small fish could become a shark overnight, where early adopters could beat the system and finally win against the old world of banks and suits. But today, that world no longer exists. Crypto has changed permanently, quietly, irreversibly, not because of technology, not because of regulation, but because of who entered the room. BlackRock, Fidelity, Vanguard, Samsung, Google, JP Morgan, Apple, nation states, sovereign wealth funds, Fortune 500 companies. When these players enter an industry, the game resets. Crypto is no longer an outsider. It has become a pillar of the global financial architecture. ETFs made it official. Crypto is an asset class, not a speculation anymore. Regulation made it legitimate. Governments now treat crypto like they treat equities, bonds, and commodities. Balance sheets made it undeniable. Corporations hold Bitcoin the same way they hold cash reserves. Even banks who once called Bitcoin rat poison now offer custody, liquidity, and settlement rails for digital assets. The biggest irony of our time is this: the same institution that laughed at crypto now quietly accumulate more than most retail investors ever will. And here's the important lesson. Institutions don't buy assets to gamble. They buy assets to own the future. When they buy land, they control the geography. When they buy stocks, they control companies. When they buy bonds, they control governments. When they buy Bitcoin, they control the new monetary layer. And they want as much of it as possible. But here's the twist. They can't just buy all of it at once. Why? Because the price would explode vertically and they would get almost none. So what do they do instead? They engineer time. They engineer volatility. They engineer doubt. They engineer the fear because the goal is simple. Shake weak hands, accumulate strong assets, and repeat it until retail is exhausted. This isn't conspiracy. This is how capital markets have worked for centuries. If you study oil, gold, stocks, real estate, the pattern is always the same. The rich accumulate slowly. The poor buy emotionally. The rich buy when there is a silence. The poor buy when there is a noise. The rich understand the cycles. The poor react to headlines. And for the first time ever, all of this is visible on chain. That means institutions can see literally where your stop loss is, where you take profit is, where your liquidation is, what you're holding, when you're panicking, when you are euphoric, and when you are about to break emotionally. This level of transparency has never existed in any financial market before. Crypto is the only system where whales can read retail like an open book. So, when institutions shake the tree, they know exactly how many apples will fall. And here is the part most people still don't understand. Institutions are not entering crypto because they like Bitcoin. They are entering because the global financial system is being restructured. And crypto is the rail, the plumbing, the infrastructure, foundation layer of the future economy. Everything is being tokenized. Real estate, stocks, bonds, gold, carbon credits, commodities, identity, royalties, supply chains, AI compute credits, automated services, microtransactions, energy grids, and AI. AI is the multiplier that forces the shift. AI cannot operate on Fiat. AI cannot wait 3 days for settlement. AI cannot pay international fees. It cannot ask for permission, cannot use manual accounting system. AI companies cannot scale with the friction of traditional banking. So if AI is the brain of the new world, the crypto is the bloodstream. Every intelligence service will run on a programmable value. Every automated system will use smart contracts. Every machine will make micropayments without human involvement. So every global network will settle value instantly. Every digital entity will use tokens, not cash anymore. Crypto isn't just part of the future. Crypto is the infrastructure of the future. And while retail is still arguing on YouTube comments, institutions already know this. That's why they accumulate steadily, quietly, patiently, without emotion, without panic, without doubt, because they're not buying for 3 months. They are buying for 30 years. And here's the truth you must never forget. Institutions are not early. You are early But believe me, they are catching up very fast. And this is why you must understand what comes next. Because once institutions enter, the rules of the game change entirely. So prepare yourself. We are only at the beginning. If you want to understand where crypto is going, you first need to understand where the world is going. Because crypto does not grow in a vacuum. It grows because reality demands it. And the truth is very simple. The world that exists today can no longer function on the financial system created 50, 100, or 150 years ago. The old system was built for a world that moved slowly, a world with physical banks, borders, money, physical paperwork, approvals, delays. But today, everything is digital, instant, borderless, automated, and global. And when the world speeds up, money must speed up with it. This is where AI enters the story. Most people still think AI is just a tool, something to chat with, something to generate images, something to automate small tasks. But AI is not a tool. AI is an economic force. It is the first technology in human history that can perform actions, decisions, and transactions faster than humans, 24 hours a day across every part of the global economy. And that changes absolutely everything. Because when AI takes over operations, you can no longer use money that requires bank approvals, permissions, 3-day settlement times, geographic restrictions, office hour, manual oversight, outdated rails, legacy intermediaries. AI cannot operate on Fiat rails. The math doesn't just work. The speed doesn't work. The cost doesn't work. And the architecture doesn't work either. AI will not ask the bank for permission to send value, will not wait until Monday morning at 9. It will not pay extra because transactions cross the border. It will never pause because the system is closed for maintenance. AI will not adapt itself to human bureaucracy. It will make millions of automated micro decisions per second across the industries. It doesn't matter, transport, logistic, supply chains, energy grid, finance, healthcare, insurance, manufacturing, global commerce. Every one of these decisions involves value transfer. Not once, not twice, but millions of times per hour. The current fiat currency system breaks under 1% of that load. This is why digital money is not an optional. It is mandatory. Whether people like it or not, whether politicians understand it or not, whether influencers agree it or not, value must become programmable. Because the next generation of the world economy will not run on a paperwork and human approvals. It will run on smart contracts, automation, AI agents, tokenized assets, digital ownership, autonomous systems. And this is the most important point of this entire episode. If AI is the engine of the next economy, crypto is the fuel. AI needs crypto the same way cars need gasoline. Without programmable money, AI is useless in real commerce. Now, think about this. Every major tech giant in the world, Google, Amazon, Microsoft, Nvidia, Apple, Meta, is building digital ecosystems that rely on tokenized compute, tokenized storage, bandwidth, tokenized AI models, different tokenized access services. Tokenization is simply digitizing economic value, the same way the internet digitalized information. And once everything becomes digital, the entire economy becomes frictionless. This is why governments are rushing into CBDCs. This is why institutions buy crypto quietly. This is why ETFs exploded. Fortune 500 companies are integrating blockchain rails. And why banks now offer crypto custody. Why every major country is studying digital money. They all know you cannot run a digital civilization on analog money. And this leads us to the biggest truth of all. Crypto is not the future. Crypto is the requirement for the future. When you understand this, volatility stops scaring you. Bear markets stops confusing you. And price drops stop affecting your confidence. Because once you see that the world cannot function without crypto, you realize you are not investing in coins. You are investing in the future of financial bloodstream of the entire planet. And now that you understand why fiat currency cannot survive, you are ready for the part that most investors never learn. How the game is actually played. Not the fantasy version, the real version. So get ready. It's time to go into the shadows of the market. Most people think the crypto market is chaotic, random, unpredictable, driven by news, charge, or luck. But nothing could be further from the truth. The crypto market is one of the most predictable systems in the world, not because of the price, but because of human behavior and the players controlling the liquidity. Let me tell you something that will change the way you see the market forever. Whales and institutions are not reacting to the market. They are controlling it. Not always directly, but always strategically. And to understand how they manipulate the system, you must first understand one thing. They know exactly how you think. They know how the retail behaves. They know when retail panics, when retail gets greedy, when retail cannot take the pain anymore. And why? Because the blockchain exposes everything. In traditional markets, your stop losses and liquidation points are hidden. In crypto, they are all visible, open, on-chain, analyzed in real time by machines, more powerful than any human trader. Whales don't guess. They don't wonder, hope. They see where your stop loss sits, where you take profits, where your liquidation sits, how much leverage you are using, how much margin you have left, how close you are to emotional exhaustions, how much liquidity lies above and below the price, how much fear is currently in a market, and have you been underwater, how much pain you actually can tolerate. This is why your trading feels like market is targeting you. Because it is, not personally, but mathematically. Every candle, every wick, every dump, every bump, they are all liquidity hunts. The price doesn't move randomly. It moves to the nearest pool of liquidity. And retail traders provide it every single time. So how do whales extract money from retail? There are basically three primary methods. First, exhaustion through fear, slow bleed. This is the most common method. Whales push the price down slowly. Not enough to break everything at once, but enough to create discomfort, doubt, mental fatigue. It's not the crash that destroys retail. It is the grind. The market drips downward for weeks, sometimes months. Headlines turn to negative, social media gets quiet. Influencers disappear, and friends stop talking about crypto. People begin questioning their own decisions. You open your portfolio every day and see it slowly shrinking. Not collapsing, but shrinking. And eventually, you don't sell because of logic. You sell because of emotional exhaustion. Whales love this phase. They accumulate silently, like predators, waiting for the perfect moment. Second, euphoria traps, the blow off top. When fear doesn't shake you out, whales use the opposite weapon. Your dreams. They bump the market hard. New all-time highs. Headlines of euphoria. Influencers screaming, "We are going to the moon!" Friends asking you which coin to buy. Different Telegram groups exploding with confidence. Your portfolio flashing green every morning. And right at the moment you finally say, "I can't take another dip, I'm selling high, locking profit. This is enough." That's when you fall into the trap. Because you are selling your limited, scarce asset to whales who bought it cheap from your fear. They win twice. They get your assets low. They get your assets high. And you walk away thinking you made a good trade, never realizing you actually sold the future for a short-term emotional reward. Then there is a third. The liquidation hunts. It's the instant execution. This is the violent version, the one everyone recognizes but nobody understands deeply. The market bumps aggressively into a known liquidation cluster, then violently reverses or dumps into a sea of stop losses, then instantly bounces back. These moves are not random, they are surgically precise. These wicks are not market volatility, they are weapons. A liquidation wicks is a harvest. Billions wiped out in seconds. Leverage positions liquidated. Stop losses triggered. Liquidity consumed. Retail destroyed. And every time a retail trader gets liquidated or stopped out, the market maker gets paid. It's a numbers game, a predictable game, a game designed to feed on emotional impatience, over-leveraged participants. This is why whales don't fear volatility. They create it. The bigger truth. You were told that crypto is here to make everyone rich, that everyone can become a millionaire, that every retail investor has the same opportunity. That is the biggest lie. Markets were never designed for equality. They were designed for efficiency, meaning capital flows from the emotional to the unemotional. from the impatient to the patient, from the uneducated to the informed, from those who seek shortcuts to those who understand the game, the rules. The real opportunity in crypto has always been the same. Accumulate, hold, survive, outlast. Because traders chase emotions, whales chase value. Traders gamble the present when whales accumulate the future. Retail sells because they need money. Whales buy because they understand money. Now that you understand how manipulation works, you will start to see every candle a bit differently, every dip differently. So it goes for the bump, every headline. You will no longer react emotionally. You will observe, because manipulation only works on people who don't understand the game. But when you do understand it, manipulation becomes information. And this prepares you for the darkest part of the market. The part most retail investors never survive. That's the retail trap, the place where wealth gets transferred from the many to the few. The retail trap, how you are being played. There is a moment in every cycle when retail investors believe they finally understand the market. A moment when they feel confident, experienced, even wise. A moment when they say, I've seen this before. I know what's coming next. And that moment is always the moment they get trapped. Because the biggest danger in the market is not ignorance, it's false confidence. Retail investors don't lose because they are stupid. They lose because they are predictable. Let me show you exactly how the trap works. The trap always begins with distraction. Crypto today offers thousands of tokens. Narratives changes every week. Influencers scream about the next 100x. Twitter floods you with charts and predictions. YouTube bombards you with the urgent emergency alerts. Your friends chase memes. New projects appear out of nowhere. Old projects rise from the dead. And every day, someone claims to have found the next Bitcoin. This is not accidental. It is strategic noise. Because the more choices you have, the more likely you are to make a bad one. Humans don't choose better with options. They choose worse. They scatter their attention, diversify into confusion, allocate into uncertainty. This is why casinos have hundreds of games, not because you need options, but because options weaken you. The crypto market does exactly the same. It floods you with temptation, so you forget the real assets that build generational wealth, like Bitcoin, Ethereum, XRP, a few real utility networks, a handful of narrative-proof blue chips. Retail doesn't lose money because crypto is risky. Retail loses money because crypto is distracting. Whales don't fall for this. They stay focused. They accumulate the assets that survive decades, not the tokens that pump only for a weekend. And then comes the second layer of trap influence. Retail investors trust the wrong people. And not because they are naive, but because the wrong people sound the most confident. Influencers are paid to create emotion, engagement, excitement, urgency, fear, greed. They are not paid to tell the truth. They are paid to keep you watching. In the background, powerful players fund selective narratives to control the sentiment. You will never know who paid whom. You will never know which opinion was both. But the effect is the same. Retail begins to doubt what is right and trust what is profitable for someone else. And doubt is the beginning of destruction. Because once you doubt, you stop holding your conviction. Once you doubt, you look for shortcuts. You doubt, you follow the crowd. And you click sell during the worst possible moment. Retail doesn't get destroyed by bear markets. Retail gets destroyed by manipulated opinions inside the bear market. And the third layer of the trap: distorted time perception. This is the cruel part. The part whales exploit better than anyone. Retail investors always underestimate how long things take. When the price goes up, they expect it to go up forever. When the price goes down, they expect it to go down forever. Both are illusions. Wealthy investors live in a different time frame. They don't think in weeks or months. They think in cycles, years, decades. Retail thinks, when will I be rich? Whales think, how much will I own by the time the system matures? And that tiny difference in perspective transfers billions of dollars from impatient hands to patient hands every single cycle. You do not lose money because crypto is volatile. You lose money because your timeline is too short. The fourth layer of the trap is self-sabotage. And people sabotage themselves without even noticing. They buy high, sell low. Buy back high, sell low again. And they repeat until broke. They chase bumps, fear dips, overtrade, move between tokens, jump between ecosystems. Try to time the market. Try to catch the bottom. Try to outsmart the whales. But none of this works because the moment you start reacting emotionally, you are no longer an investor. You will be a prey. And whales don't fear prey. They feed on it. And here's the hard truth. Retail investors don't lose because they pick bad assets. They lose because their mind isn't built for the game. Their attention is scattered. Their patience is weak. Their conviction disappears under pressure. And their emotions override the logic. Their risk management is basically non-existent. Their expectations are unrealistic. Whales don't beat retail with intelligence. They beat retail with psychology. Because the market is not just a financial system. It's a behavior, extraction machine. If you react emotionally, the machine extracts your liquidity. If you hesitate, the machine extracts your liquidity. If you chase green candles, the machine extracts your liquidity. So, if you panic sell, the machine extracts your liquidity. The market is designed to reward discipline and punish emotion. This is why the retail trap exists, to remove assets from the hands of the many and concentrate them into the hands of the few. But here is the good news. If you understand the trap, you escape the trap. If you understand how wealth behaves, you stop behaving like retail. You understand the manipulation. You stop reacting to it. You understand the cycles. You stop fearing them. You understand the future. And you stop doubting the present. And this brings us to the most important chapter of all. How to survive bear markets without losing hope, and why the entire future belongs to those who hold strong. How to survive bear markets without losing hope. Most people enter crypto hoping to get rich. But the ones who actually make it are the ones who learn how to survive. Because the truth is very simple. Bull markets create excitement. Bear markets create millionaires. But only for those who understand how the game works. Surviving a bear market is not a skill, it is a mindset, a philosophy, a way of seeing the world differently from the crowd. Today, you will learn that philosophy, not the fantasy version, but the real battle-tested version that institutions, whales, and generational wealth builders follow. So, let's go deep. Rule number 1. Understand why bear market exists. Most people think bear markets happen because something goes wrong. No, bear markets happen because they are required. You cannot build a new financial system during a permanent bull market. You cannot accumulate meaningful positions when everything is expensive. You cannot shake out weak hands if the price only goes up. And you cannot transfer wealth from impatient to patient ones without volatility. The entire market structure is designed to reset, redistribute, and reposition capital. Bear markets remove the noise so the real builders can build. They remove tourists so the committed can stay. They also remove gamblers so the future can be owned by investors. If there were no bear markets, there would be no opportunity. Rule number 2. Know what you own and why you own it. You don't survive a bear market with hope. You survive it with knowledge. If you understand the real purpose of Bitcoin, you don't panic when the price drops 40%. If you understand why Ethereum is the backbone of global computation, you don't sell it because of a temporary dip. If you understand why XRP is positioning to run the new financial rails, you don't fold when influencers spread fear. If you understand AI will require tokenized value, you see dips as gifts, not threats. Most people lose money not because the asset is bad, but because they never understood the asset to begin with. They bought a chart, not the technology, infrastructure, or its fundamentals. Charts don't give conviction, knowledge does. When you truly understand what you own, fear collapses. Rule 3. Make the market your employee. not your master. People act like the market decides their fate, but the market is not your master. The market is your employee. Its job is to give you opportunity. Your job is to take it. Wall Street volatility as salary. Retail treats volatility as trauma. The difference, perspective. Volatility is not a threat. Volatility is the mechanism that transfers money from emotional hands to disciplined ones. When the price goes down, accumulate. When the price goes sideways, accumulate. When the price goes up, observe, but don't lose your mind. You don't plant a seed and dig it up every week just to see if it is growing. If you do so, you will kill the plant. Crypto is the same. You plant, water, cultivate, and you wait. Patience is not passive. Patience is a strategy. Rule 4. Remove your weapons of self-destruction. I mean, stop losses, high leverage, chasing bumps, following influencers, jumping between tokens, overtrading, and expecting overnight success. Checking charts 50 times a day and selling because of the fear, buying because of the hype, and trying to time the bottom. These are not strategies. These are real traps. And whales know them. Exchanges exploit them. Algorithms drag them. So your weapons destroy you long before the market does. You survive by simplifying. Hold fewer assets, stronger assets, and hold them longer than average person. Remove leveraged, panic, noise. The simplest strategy is often the strongest one. Rule 5. Align your investments with the future, not today. Bear markets make you think the story is over. But look at history. Amazon dropped 95%. Apple almost went bankrupt. Netflix collapsed twice. Google was called a failed project. Tesla sank repeatedly. Bitcoin has crashed over 80% several times. Every great asset experiences death before experiencing domination. The future is not built linearly, it is built chaotically. The people who quit early always miss what is coming next. We are heading into a world of AI-driven automation, tokenized assets, instant global payments, smart programmable money, borderless liquidity, self-custody, decentralized identity, digital governance, AI to AI. None of this can run on a fiat currency. Bitcoin is the digital store of value. Ethereum is the digital economy. XRP is the digital settlement layer. Other real utility chains support real use cases. The financial world is being rebuilt in real time, right under our feet. If you invest according to the present, you lose. If you invest according to the future, you will win. Rule 6. Never let emotion dictate your strategy. Every bear market becomes a psychological war. Your mind will whisper, I should sell before it drops more. I should switch to another coin. I should time the bottom. I made a mistake. Everyone else is smarter than me. This time it's different. It's over. These are not your thoughts. These are fear responses. ancient survival instincts forced into digital markets. They are predictable. They are universal. They are manipulated. Whales don't beat you with intelligence. They beat you with your own emotions. The moment you detach emotions from your strategy, the game changes. You stop being prey. You stop being manipulated and hunted. You will become untouchable. Rule 7. The real strategy: buy, hold, accumulate. Everyone wants the secret formula, but the people who win don't use secret formulas. They use discipline. Buy real assets, hold them offline, accumulate over time, ignore the noise, focus on fundamentals, understand the cycle, and don't get shaken out. Dollar cost averaging is not a small strategy. It is the strategy of institutions because it eliminates emotion. It eliminates mistakes, timing stress, fear, greed. It's the strategy you use when you know the future is bigger than the present. And the spirit of survival, when you understand everything we've discussed so far, bear markets no longer feel like punishment. They feel like opportunity. They feel like clarity. They feel like a discount on the future. The most dangerous thing you can do is set a temporary cycle, destroy a permanent opportunity. If you can survive the winter, you will own the spring. And those who own the spring own the entire harvest. But to see the full picture, you must understand the final chapter. The one nobody wants to talk about, but everyone must face. The shift that will impact every country, bank, business, and family, and every investor on this planet. The coming financial reset and the path to generational wealth. There is a truth most people feel, but very few dare to say out loud. The financial system we grew up is dying. Not tomorrow, not 20 years from now, but right now, in real time. Governments won't admit it. Banks won't publicly acknowledge it. Media won't warn you until it's too late. But all the signals are already here. Unprecedented debt levels, artificial money printing, global currency devaluation, collapsing purchasing power, geopolitical instability, widening wealth gaps, declining trust in traditional institutions, and transforming labor productivity and value transfer. Tokenization integrating into financial architecture. Institutions are accumulating digital assets at historic speeds. This is not random. It's not accidental, nor temporary. This is a transition. One system is ending, a new system is beginning. And the people who understand this early will be the ones who build generational wealth. So, let me explain this clearly, without fear, without hype, and just truth. The old system is exhaust. The current financial system is built on three fragile pillars: debt, inflation, and trust. All three are breaking. Governments cannot repay their debts. Inflation eats the savings of the middle class. And trust in financial institutions is at the lowest level in modern history. You feel it. Everyone feels it. The old world is cracking, but the new world is rising right behind it. The new financial system will be digital, automated, and tokenized. In the new world, money moves in seconds, not days. Value is programmable. Identity is digital. Ownership is transparent. Borders don't matter anymore. Banks become software. Contracts execute automatically. AI makes financial decisions instead of humans. Assets are tokenized. Settlements are instant. Corruption is harder. Efficiency is much higher. And opportunity is global. And the rails of this new world are crypto networks, not because they are trendy, not because they are speculative, but because they are the only technology capable of running a global, automated financial system in real time. Crypto doesn't compete with fiat currency. Crypto replaces the broken plumbing underneath fiat. This is why institutions are entering now. This is why ETFs exploded. This is why governments are digitizing currencies. This is why Fortune 500 companies are integrating blockchains. This is why banks are offering custody, and BlackRock calls tokenization the next evolution of markets. They are not guessing the future. They are building it. But here is the part nobody wants to say out loud. When a financial system resets, not everyone survives the transition. In every historical reset, some lose everything. Some maintain stability. Someone becomes wealthy. And very small group becomes dynastically wealthy. The difference always comes down to one thing: positioning, not timing, no luck, no predictions, or no trading skills. It's positioning, where you stand when the world shifts. Because once the new system locks in place, there is no early advantage anymore. The window closes. We are living in that window right now. It won't stay open forever. The silent reason why the wealthy are moving into crypto now. Wealthy families are not entering crypto because they suddenly understand technology. They are entering because they understand history. Every time a system changes, wealth moves first, capital moves first, old power structures reposition first. Why? Because they know the truth. Money stored in the old system dies with the old system. Money stored in the new system grows with the new system. This is why millionaires and billionaires are quietly trading their fiat currency for Bitcoin, Ethereum, XRP, Solana, real utility networks. They are not chasing bumps. They are not gambling. They are not trading day to day. They are converting one form of wealth into another form of wealth. That will survive the next 50 years. They don't want to be early adopters. They want to own the infrastructure. What retail argues, institutions accumulate. While retail panics, institutions prepare. While retail sells the bottom, institutions buy the future. By the time the masses finally understand, the wealthy will already be fully positioned. And the cycle will repeat. What about the average person? What about you? Most people feel powerless in these transitions. But you are not powerless. In fact, this is the first time in modern history that ordinary people can position themselves on the same playing field as institutions before the reset even fully happens. Crypto is the great equalizer, but only for those who understand the game. So let me make this simple. If you accumulate real crypto assets over the next few years, hold them securely, stay calm during volatility, and think in cycles instead of days. You will stand on the winning side of the greatest financial shift in our lifetime. You don't need to be perfect. You just need to not self-destruct. Because the truth is, generational wealth is not built by genius. It's built by discipline. The path to generational wealth. There are only 5 steps. Own real assets with long-term value, not hype, distraction, real digital property. Hold them, please, outside exchanges, under self-custody, offline, safe. Accumulate over time, not all at once, not emotionally, but consistently. Think in decades, not days. The future does not reward speed, it rewards conviction. Stay calm. When others lose their minds, volatility is the price you pay for being early to the new world. If you do this, you will be ahead of 95% of retail, 80% of institutions, the majority of influencers, and the entire next generation of new investors. You will not just survive the reset, you will benefit from it. And one day, your children and your grandchildren will ask you the same question. How did you know? How did you see it coming? How did you prepare? And you will simply smile because you will remember this moment, the moment you realized the truth, the opportunity of a lifetime. It does not come when everything is easy. It comes when everything is confusing, chaotic, uncertain. The future belongs to those who remain calm in the storm and keep planting the seeds while others wait for the sun. If you watched this far, you already know something deep inside you. You are not like everyone else. You don't run from uncertainty. You look into it. You don't collapse under pressure. You grow inside it. You don't panic when the world shakes. You analyze. You adapt. You prepare. And this is what separates survivors from victims, investors from gamblers, leaders from followers. The truth is, the world is changing. The financial system is transforming. And the people who understand it early will become the foundation of the new economy. Not because they are lucky, not because they are chosen, but because they had the clarity to see through the noise, the courage to act through uncertainty, and the discipline to stay committed through chaos. You and I both know something important. You cannot control the market. You cannot control the institutions, control macro events, nor control other people's opinions. But you can control your knowledge. You can control your conviction, your strategy, your reactions. You can control your inner compass. That is where true power lies. Not in the predicting the market, but in understanding its nature, not in timing every move, but in positioning yourself for the future, not in chasing hype, but in recognizing value, not in avoiding volatility, but in thriving within it. Crypto is not just an investment, it's a test of character. It's a test of patience, discipline, vision. And those who pass this test do not just build wealth, they build freedom. Freedom from the old system. Freedom from inflation, from panic cycles, from manipulation, fear, and ultimately, freedom from their limits you once believed were real. This is why Evoluna exists. Not to hype the market, not to make predictions, not to chase headlines, but to give you clarity in a world designed to confuse you, to give you perspective when noise tries to overwhelm you, to give you inner stability when the world shakes, to help you see the big picture that most people will never see, and to remind you again and again that the future belongs to those who prepare, not to those who panic. So, take everything you learned today and let it become your new foundation. When the next dip comes, you will not fear it. You will understand it. When the next shakeout happens, you will not collapse. You will stay centered. When the next narrative shifts and it arrives, you will not be distracted. You will stay focused on value. And when the next bull market rises, you will not be one of the desperate few trying to chase what they lost. You will be one of the calm ones, the prepared ones, the positioned ones, the ones who knew that discipline today creates freedom. Thank you for watching. Thank you for thinking. And thank you for choosing clarity over chaos. And remember always, the real freedom starts from the mind.